You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPEQX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music, or no music if you're listening live, because we're going raw straight from the Southern studio today, listeners. Yes, it is time once again for the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been mainlining out there this week. Like I said, if I sound a little different, beaming at you from the warm and tropical Southern studio today. So it should be a fun one. Remember, if you want to join us, you want to get in the live, you want to get in for yet another awesome pro Q&A. Who doesn't have questions about Vol these days? And we had our good buddy, Mr. Vixologist, joining us to help us talk and answer pretty much all of your questions about all things volatility. So if you want to check out all that fun, check out Options Oddities, the giveaways, early access, all sorts of fun. TheOptionsInsider.com/pro is the place to go to learn more as we learn who's joining us on the old Thursday edition of the Option Block. First, we go out to the hinterlands of Chicago, aka St. Charles, where we are joined once again by the Uncleist of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir.
Always a pleasure to be here. Enjoy the Southern studio.
I am enjoying it out here. As a little bit warmer than Chi-Town right now, which is nice. And then we also join us from the palatial halls of Schwartz Manor, where we are joined once again by the Flowmaster, Mr. Henry Schwartz, not from SIBO East today, but from the aforementioned Schwartz Manor. Mr. Flowmaster, welcome back to the show. How go things on the stately grounds, sir?
Everything is good up here. I'm in Woodstock, New York. Because today's a synthetic Friday, because there's no trading tomorrow. So we have my daughter has a week off, and we're just enjoying the 27-degree spring up here.
That's
it's
funny you
chilly.
say that. Synthetic Friday. I was trying to explain that. I said that a few weeks ago, and I was trying to explain that concept to my son. And I was like, it's like Friday, but the day's off because there's no trading, but it kind of fell on deaf ears. The term synthetic Friday, I guess you had to be there, Mr. Flowmaster, down on the trading floor where that term was born. As we keep on rolling, listeners, right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we do just that. We break down what the heck is trading out there. And it's another one of those weeks, listeners. You don't like where the market is, just wait 5 minutes. I know I've been saying that a lot, but I say it a lot because it's true. These markets are wild, and if you think you know what's going on, you don't. And that's just kind of the market and the environment we are all living through. Of course, we had some green towards the end of the week. Last week, beginning of this week, we started coming in red. Tariff spookage, to coin a phrase, was spooking everybody. And then we saw that red exacerbated yesterday. Powell kind of piling on a little bit yesterday as well. And so that combo really spooking people yesterday, taking the S&P lower. Today, we started off a wee bit lower. Then as the session has progressed, like I said, you don't like where it is, just wait 5 minutes out there, listeners, because now we are firmly in the green. As we kicked off the show, the S&P was well south of 5,300, about 5,260 in that ballpark. Of course, as we're coming into the start of the show proper now, we are seeing the S&P up about 0.2%, a little bit north of the 5,300 level. The Dow still off about 0.75%, and the NASDAQ up about 0.2%. So a decidedly mixed market. It depends where you hang your hat in the market, what kind of day you're having. But right there today, at least, as we're kicking off the show, a bit of a mixed bag. And our old pal Bix Cash heading into a long holiday weekend, taking a bit of a hiatus. I emphasize a bit. It's not down much. It was at about a 31 when we kicked off the show. That puts us down pretty much exactly 2 points from the Monday show. VVIX also coming back down a wee bit at about a 120 when we kicked off the show, down about 15 points from the Monday show. Let's go around the horn the opposite of the way we started. Let's go back out to the stately grounds of Schwartz Manor. Mr. Flowmaster, sir, obviously another tumultuous week in the rearview mirror and continuing today. What's been catching your eye, sir?
Well, it certainly has been. It's been a heck of a month, and I don't. We're still only at we're only at the middle, right? But we've kind of come off of the extremes of volatility, right, where we saw VIX kind of quickly get back up towards 60. Everything basically from the moment that that Trump picked up his poster of the tariffs, through now, it's kind of a different marketplace. So, VIX hanging around 30 though still means that you're going to see 1% and 2% moves every day. That is what the market is pricing in. Yesterday was kind of a perfect example of it. It was kind of, we had a few quiet hours, and then we had a pretty solid sell-off. I think it's interesting, in that things have calmed down and people are kind of looking across stocks. You see some big movers today, both directions, right? So some of the healthcare names, are seeing double-digit moves, and most of the sectors though are positive. So I was in Chicago last week running around, and it was absolutely exhausting, right? Just from the not only the 450 point move in the S&P futures right in the middle of the day, but just kind of how everything is unfolded. So, I think traders are I think everybody's happy to have a long weekend after this. And, we'll continue to see. I mean, nothing's going to change, right? That's the big story the big theme is that this is just, we know it's going to stay volatile. We know there's going to be a lot of headline risk. We are kind of, getting right into earnings as well. So there's just a lot of information coming at us. Again, it's kind of, in moments like this and the way that these last couple of weeks have been, we have a big market drawdown, big giant volatility spike. Things are kind of shaking out now. And, that's where, that's where traders love kind of the action, because you can find different trades to put on, whether you think we're going to rebound or whether you think it's going to be a rough 6 months or year. There's kind of something for everybody out there.
So to reiterate there, listeners, the Flow Master needs a nap. He's looking forward to a nice nap. I think we all probably could use a nice little nap or a little hiatus away from our screens after the madness that is these markets, and just living tweet by tweet, which we joked at the start of the year when Trump came back into office. We're back in that mode, listeners. I don't think any of us knew just how much we would be in it and how quickly we would be in it, but we are back in that mode, tweet by tweet, listeners. So enjoy it as we roll on out to the hinterlands of Chicago. Mr. Uncle Mike, another tumultuous week, a lot of whipping and sawing. It's an Uncle Mike day, then it isn't, then it is again, all within the span of a few minutes. How are you holding up, and what's been catching your eye out there?
Well, I think that when you have times like this, you just got to ride it out. I mean, I hate to sound like what everyone else says, but you just got to deal with it. We're down 50 points on the week in the S&P 500. So considering all the volatility with which we've been having over the last couple of weeks, this week is arguably a boring week, when normally it would have been kind of up till a few weeks ago, this would have been kind of an active week, but this week's kind of boring by comparison. So watching that, also watching the fact that we are getting the move that we're getting in gold, continuing to see where that's going. Silver is not following it. And so my theory is that there's so many uses for silver, not just being a precious metal, it's also a usable metal in a lot of ways, that there's concern over that. And then the thing that I continue to watch is that one of these days, it wouldn't surprise me if we just had some major move in the treasuries just out of nowhere. And we have not had that yet. So we've had movement in the treasuries, but just not a major volatility event, if you will. And it's kind of surprising to me that we have not had that. So I'm continuing to watch that in anticipation that it might happen. And that this would be in the 10-year. For better or for worse. Curious to see what would happen with something along those lines. So continuing to watch that. And then Apple is still below 200 right now. That's something that is pretty surprising, even for Apple, even in this market, that we're still not above 200 with Apple as of yet. And we have a lot of headlines coming, a lot of earnings coming. I don't think May is going to be a boring month, and that's what I'm seeing.
You mentioned the precious stuff. That's been the subject of much debate of late. In fact, a lot of our guests on our futures and futures options oriented program, we're taking a bit of a dim view of the shiny stuff. In fact, you came on to rebut them not too long ago. Certainly on the gold side, it seems like that trade has been playing out pretty well. Like you mentioned, silver kind of struggling. Gold seems like every time you pull it up, it's a new all-time high right now. What are your thoughts on the king of the shiny stuff, gold, right now, Mr. Uncle Mike? You think this rally in gold has some more legs? You think maybe we're starting to peter out? Are we going to be hanging out here for a while? Where are you hanging out in the big dog?
I mean, we're going to have a pullback at some stage with gold. We do actually have some exposure to it in our strategic night portfolio. So we're putting that in there as kind of I hate to call it a hedge, but just as a way with which to gain some diversification with where it is on there. I mean, if you just look at gold, it's up, over 20% on the year already. And it's doubled since, just in looking back, since 2022, gold's more than doubled. And so eventually when stuff goes up this quickly, it does come down. Regardless of what the economic conditions are, if you look at silver, roughly a little over 10 years ago, it came down, and then at some stage, gold will come down as well. But for now, it's acting as quite the inflationary hedge, if that's what you're worried about, or life chaos hedge, one of the two. So definitely a lot of movement in the gold front.
Are you down for a little life chaos hedge? It does seem like gold is certainly living up to that role, which a lot of people thought it kind of faltered at back a few years ago when we had the first run of inflation, big sell-offs in the broad market, and gold didn't really deliver, making up for lost time, I suppose, this year. If you're a gold bug, you're having a pretty decent run out there. In fact, we broke down the largest moving assets of the year so far yesterday on the futures rundown. No surprise, VIX is in there, but VIX is kind of an outlier. You take VIX out of the equation to the upside, gold kind of has the number one spot to itself. So interesting stuff. And of course, for all you crypto heads, Ether owns the downside right for the year so far. So bad news on the crypto front. Good news on the original gold, aka what the Bitcoin folks keep arguing that it is, digital gold. The real thing, having a good year as we keep on rolling. Is it a good day out there in the options market, listeners? The answer is, again, kind of a mixed bag. I think going back to what the Flow Master said, kind of a theme for the show, maybe these markets are a little exhausted. Well, again, you got to pick your poison. Some maybe a little bit more exhausted than others. VIX, for example. VIX seems like it's having a hard time getting out of bed today. Maybe because we're not moving 2% in either direction or whatever it is. It just can't get out of its own way today. 217 on the tape right now. That normally wouldn't be terrible, but the ADV is well north of 1 million, 1.12 million. Does not seem like we're going to be hitting that bad boy today. But again, you never know. VIX comes in fits and starts. Maybe we have a aggressive pop and all of a sudden VIX puts up 500,000 contracts. But as of right now, pretty sleepy. The ADV, like we said, 1.12 million. The big dog out there, the June 16 puts, which we were talking about earlier this week, I think a big block of them went up for about 12 cents. We put it out to you folks, whether you like that level. I mean, 16 puts, I mean, you're buying some duration. You're buying all the way out to June. And historically, June, not a bad time to be short vol. 16 strike, though, given where we are right now, it seems like it might be a bridge too far. We put it out to you folks. I do believe I have the results here somewhere if I could scroll. I don't think you folks were huge on those VIX puts, and you know what? I don't have it in my notes right now, listeners. I think you folks were I think slightly biased towards buying. I'll have to go check the results. Maybe our producer can throw those results in for me. But as we keep on rolling, listeners, out to the land of SPY. Now VIX can't get out of bed. You might be forgiven for thinking the same thing for SPY, but SPY had its coffee. Maybe it shot a jolt cola this morning. 6 1/3 million contracts. That's pretty impressive. The ADV is 10.7 million. Certainly seems like it's on track to hit that today. The S, a little bit north of 1 3/4, 1.78 million. So the S, right about where we would expect it to be in normal markets, not even in markets when it's averaging nearly 4 million contracts a day. And then small caps also looking about where we would expect it, a little north of 700,000 contracts on the tape right now. The ADV close to 1.7 million, about 1.67 million. And the Qs a little bit north of where we'd expect them as well, about 2.43 million. The ADV 4.87 out there. So really the outlier in terms of just doing a whole lot of nothing right now is the VIX, which is interesting in and of itself. Now, the question many of you have, I know, are the single names following suit, listeners? Is it sleepy and sluggish out there, listeners? And the answer is, you know what? It's respectable. It's cost you $275 to get to the top 10 today. That gets you to our old pal Intel, my old stomping grounds. Intel, you know, another one of these names. It's hot, it's cold, it's hot, it's cold. It's cold again right now. $18.90, off about a third of a buck today. Again, good for the number 10 spot. 275,000 contracts on the tape. Number 9, we're hanging out still in tech land. It's AMD. 287 on the tape for AMD. 87.40. So AMD, it's kind of had a rough few weeks out here. 87 pretty much even right now, off about $1.25 or a little over 1% out there. On the month, let's see, got as high as about, looks like, about up to about 100 a few times and right back down to where it is right now. So they've been struggling with this name. Not quite on the lows for the month, though. Got down to about 85 and change last week. So not quite there. Actually, no, that was yesterday. Got down there yesterday. So not quite there, but pretty close. AMD Number 9, 287 on the tape. Number 8, the artist formerly known as Facebook. It's Meta, 301 on the tape. You know them. They're wrestling with some antitrust fun right now. That's been kind of weighing on the stock. $500 almost exactly right now, off about $1.50. Let's see, is that the low for the better part of the last month? Yeah, pretty much. They bounced off 504 a few weeks ago. So they're back down at their lows for the month. They were at 600 just a month ago. So they've been feeling a little bit of late. Number 8, it's Meta, 301 listeners. Number 7, to the Amazonians we go, 173.15, off about $1.25, or about 2/3 of 1%. And again, it looks like it's been an interesting time for them. Number 7, the Amazonians, 326 on the tape. Number 6, this is a newcomer. I'm sure the Flowmaster might have some thoughts about this one. This is Hertz. You may have heard, listeners, a little bit of drama out there. Some folks taking a bit of a large stake in Hertz, and when that's disclosed, it drove the stock to some crazy levels. Also, maybe a little bit of some short squeeze action going on out there. It was $3.65 on Tuesday. It is $8.71 today. Up another $3 today, or 52%. So good little run for Hertz. Number 6, 374. You know what? Let's just look really quickly. I'm intrigued, because then I'll probably get the Flowmaster's thoughts too, because I'm sure he's been watching this name. Hertz, of course, whenever there's this kind of activity, folks are flocking in to the option. Let's see, what is the big dog out there in Hertz today? It's the 8s. It's the April 8s, listeners, expiring today. So one-day trade, 52,000 of these bad boys going up today, listeners. For prices, looks like around a quarter, 30 cents, somewhere in there. Actually, some got up to 60 cents. Mr. Flowmaster, I know you've been watching this name. It's kind of been lighting up the tape for the last day or two. What are your thoughts on this big pop we're seeing in Hertz? And did you see any weird flow, sir?
Well, yeah, I was just looking at that. I mean, a name like this, it's always great. We have a command in trade alert called borrow. So if you look at the borrow rate for Hertz, you actually can see that it's currently pricing around 30%. Which means it's very hard to borrow. But it actually looks like there was none available to short, at least at one leading broker, for the last couple of days. So this was kind of a known short squeeze situation. I don't see any major open interest in front of this. Maybe a couple thousand of the 5-strike calls yesterday. So those are certainly looks like they paid $230 for them. So now they're and these are for next a week from tomorrow. But yeah, there's some pretty big numbers. Yeah, the 8-strike call for today, 50,000 of them. If I look at the pricing, they've gone from a dime to 90 cents. So that's some pretty serious range. Currently trading around 80 cents. So it's these super short squeezy names, and Hertz is kind of a story name, right? Weren't they pretty much bankrupt in COVID, and they kind of came back out?
They had a few troubled periods, I believe.
So yes, I mean it's a fun one, but it looks like I don't see a lot ahead of today's big move.
All right, listeners, let's keep rolling. We go from Hertz, which again, always fun to have some new names sneaking into our top 10, because now we go right back to the usual suspects. Number 5, listeners, it's the monster. Good old MicroStrategy, MSTR, listeners. Is it up? Is it down today? Right now, it is up slightly, up about 70 cents, trading a little bit north of 312 out there. Over the last month, it's had a range. It's like it got as low as about, sub 250 out there, if I can get my chart to pull up with me. There we go, 237.95, it seems like, last week. So obviously a little bit north of that. 312 right now. Good for number 5. It's the monster, 397 on the tape. And then number 4, listeners, it's Palantir. It's a day that ends in Y. Palantir has to be back up there. It's back up north of 90 again. 93.10, up about 40 cents today out there. Let's see. Over the last month, let's look. Looks like it's got as high as as low as, I should say, about $74. And as high as 98.40. So quite the range out there in Palantir. Today, not doing a heck of a lot. 92.90, up about 30 cents or so. Good for 452 and the number 4 spot. Number 3 to the fruit company. We go Uncle Mike just bemoaning the fact that it's still below 200. How dare it? In fact, pay attention to that par level, listeners. Might be coming back to that a little bit later in the show. And Apple, a 196.81, up about $2.5 right now out there for the fruit company. You know, it's been kind of a tumultuous month for them. They were well north of 200, about 224 back on April 2nd. Then they took them down to about 172 and change on April 8th. Been kind of slowly clawing its way back ever since. Number 3 today, the fruit company, 726. Number 2, is it Tesla or is it NVIDIA? Take a guess really quick, listeners. I'll give you 3 seconds. 3, 2, 1. Yep, it's Tesla. We're back to our normal semblance of order. 1.54 million on the tape. 240.20 or so, off about $1.40 out there today. Seems like some of the bleeding, at least for right now, maybe stemmed, but again, give it 5 minutes and who knows where the heck Tesla's going to be. Right now, it's at number 2, about 1.5 million, a little north of that. And then the big dog today, once again, NVIDIA, 3.75 million. We asked you last week, selling the par puts in NVIDIA. We are back to pretty much the par strike right now. 101 in NVIDIA, off about $3.5. So those par puts very much back in the conversation again. 3.75 million contracts on the tape for the big dog, which is NVIDIA. The Flowmaster mentioned we are back in it. If we didn't have enough data whipsawing the markets, we have now more to add to the mix. A lot of earnings popping off this week with financials. Last week we had, of course, Goldman, JP Morgan on Friday. This week on Tuesday, Bank of America, Citi, and PNC, IB, as well as United Airlines on Tuesday. Wednesday, U.S. Bank Corp, Abbott Labs, Travelers, Alcoa, if you're into aluminum. Thursday, American Express and our old friends Ally, as well as the former Widowmaker known as Netflix. So some hot names popping off out there this week. Stay tuned to the website if you want updated earnings move results, and earnings season reports. It's all there waiting for you. Speaking of waiting for things, though, the Flowmaster waits for no man. So let's get to it. A little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we unleash the Flowmaster. And you know, before we get into this week's flow, Mr. Flowmaster, it's not every show that we could announce bringing a new financial product child into the world, sir. Yet we can do that this week. You folks over there at SIBO, you've been busy when you're not chatting with me. You're out there creating all sorts of new indexes. A new one dropped this week, sir. What did you bring forth into the world?
Sure. So this week on Monday was the first day of the S&P equal weighted 500 index. So the ticker for the options is SPEQX. It's actually not a new index, but it's a new options product. And what's the timing is pretty interesting because we all know S&P's down 20% ish off of its February highs. We've bounced a little bit, but still having a rough year. But the equal weighted, which is the exact same 500 stocks, but it's just 0.2% of each one, is just 0.5% of each one. No, 0.2%. I said it right. Is actually kind of flat on the year. So you can kind of think of it more like a mid cap index because the super caps like Apple and Tesla they're in the index, but they do not carry the weight that they do in the S&P 500. And it started on Monday, and I was the very first trade. I was 100% of the volume, in fact, in this product on Monday. It didn't take.
I'm getting shades of the nanos, sir.
It didn't take much, but when a product is new, it takes a while for the liquidity providers to step up and customers to find it. But because this is nothing too complicated, this is just the S&P 500 equal weighted. I wanted to actually get into that. So we're watching it. I think this one actually. there's some challenges on the nanos as we've discussed. But this one, it doesn't have the trillions of dollars benchmark to it like the S&P 500 does. However, when you see the S&P 500 struggling and a lot of the headlines talking about how European markets are outperforming and perhaps the S&P 500 might be kind of ending its dominance in terms of performance. This is an interesting alternative. So SPEQX is worth looking at, keeping an eye on for sure. I added it to my little benchmark of kind of what's going on today, so I can quickly see, here's what SPX is doing, here's what SPEQX is doing, here's what the VIX is doing, and it's an interesting one.
SPEQX. Well, it is a good time to start looking at equal weighted indices, listeners. If you're tired, you're one of those people out there who's been complaining, I'm sick of these Mag 7, I'm sick of them dominating the headlines. Well, here you go. Here is your Huckleberry, an equal weighted index. And so far this year, that's definitely been probably the better game of the two. As we keep on rolling out here, listeners, let's find some new blood to sink our teeth into. This is the name we talked about, but it's been quite some time. This is Vertex Pharmaceuticals, ticker symbol VRTX. And I've said it before, you could argue the odd block, indeed, the whole concept of unusual options activity was founded around wild upside call activity in biotechs. That's kind of where the game started. So it's kind of like we're going back to our roots out here with Vertex. Trading $488.90, up about $3 or about 2/3 of 1% today. So a decent little day for them today. On the year, it's been a pretty good year. They're up about $100 or about 24, almost 25%. I think a lot of folks who are choking on the Mag 7 right now would certainly take a 25% up year instead. So a good year out here in Vertex Pharmaceuticals. They're based out of Boston. I forgot exactly what type of drugs they are creating out there. But a decent year for them. Mr. Flowmaster, sir, what caught your eye in the Vertex, sir?
So, this one showed up, I think, in second place on my trade of the day email, right behind a put buyer in Tesla. And so the trade itself was a buyer of just over 1,000 of the April 25th 485 puts, just right after noon New York time. They did it in one of the coolest sweeps I've seen. So I've talked about sweep orders before, and it was something that we were excited to kind of model at Trade Alert, but which is now part of SIBO. And so this was a trade that had 21 individual executions, touched 6 different exchanges, but the duration of the whole thing was a single millisecond. So that's actually the smallest timestamp that you can get on the opera tape. The truth is, it's probably even much less than that when kind of in terms of the internal timing. But so the customer paid $568 average for over 1,000 of these puts. Stock was $492.04 at the time, and the stock sold down to $485 by the end of the day. So these things closed around $9. So they're up 58%, about $350,000 on that trade. And I went and actually was looking at the chart, and this stock has been all over the place since the beginning of April. Today, and I mentioned at the beginning, healthcare names and drug names really are kind of the story today. We have Lilly. I think they had some announcement on one of their weight loss drugs, something like along the line of Ozempic. That stock's up 16%. It was up 20% earlier. But then also in the healthcare space, one of the biggest losers is United Health. That one's down 20%. So, I've always said, and I've experienced, biotechs and option flow work really well together. There's some pretty smart people using options in these biotech names to put on positions and express their views. So to see somebody swoop in and grab some puts yesterday before the stock really sold off, is an interesting one. And then just kind of looking at what the volatility really has been in this name, I think it should be kind of high up on the radar list for the next few weeks at least.
Mr. Flowmaster, you got our chat excited about your equal weighted indexes. They wanted to be the first to trade the options, but they're mad that you beat them to it. So they're going to be like the second and third, I think, to trade the options now. So they're all checking it out. So get in there on the SPEQX, listeners. Flowmaster beat you all to it though, so he gets pride of place of being the first. As we keep rolling here, let's go out to another name that's hanging out in the same area, listeners. If that's not enough biotech action for you, let's go out to NeoGenomics Inc, ticker symbol NEO, N-E-O, trading about $9.50 today, kind of unched on the day today. On the year, though, not been a great year. Looking like some of our Mag 7 friends, off 14 or a little over 30% on the year. So a rough one. It was about $13.68 a year ago. They took it as high as about $19, $19.12. Looks like right to start the year. So again, kind of the worst time to hit your apex is right at the start of the year, because now year to date you look even worse. You're off $7 or 42%. So, kind of rough out there. A rough year for NeoGenomics Inc. They specialize in cancer genetics, diagnostic testing. Mr. Flowmaster, we love ourselves a little bit of upside call action in these names. What did you find out here in Neo, sir?
Yeah, so this trade actually happened after we had started taping, just about 20 minutes ago. Buyer of 1,450 of the May 11 calls, so these expire in about a month. They paid 35 cents. That was the offer at the time. It is an opening sweep. Now, what's interesting is if you look at the stock, it actually kind of might have peaked a little bit before that. So, it actually kind of pulled back a little bit. We see this sometimes, when especially when a decent sized trade prints, and this one, Neo only averages about a couple hundred option contracts a day. So this is a big trade. Occasionally you will have a little bit of pre-hedging, you could call it, or a little bit of a build up to the print. But this still is, the data confirms it is an opening customer call buyer. And, looking at where the stock is, this range of 8 to 18. So, kind of towards the low end of that. Again, I think healthcare is gonna stay kind of high on people's list of action for the next couple weeks. That and watching kind of the big macro picture. So I kind of like this one.
That is an interesting one. See the Flowmaster staying glued to the screens throughout the show, listeners. If hot stuff's hitting, the Flowmaster is bringing it to you. As we shift gears entirely, listeners, Flowmaster's talking about what's hot out there. It's healthcare, certainly, but you know what has been hot? We were just talking about it at the start of the show. It's the king of the shiny stuff, aka gold. Have you been riding this gold explosion to the upside? If so, what is your weapon of choice, listeners? Is it just straight GLD? Are you going the futures, the options on the futures, a bunch of the miners? Perhaps if it's the miners, maybe it's Dorado Gold Corp, ticker symbol EGO, E-G-O. This is a Canadian company. They have gold mines in Turkey, Greece, and Canada. So there you go. All the well-known gold meccas of Turkey, Greece, and Canada. But that said, 1995 off about 11 cents today. So kind of fluctuating today. You could probably guess what kind of year it's having. Spoiler alert, pretty good. Up about $5. Interestingly enough, kind of like gold itself, it was doing all right, but it had to hit a high back in October of last year. It was about $15 in April, went all the way up to about $18.66 in October. Then it actually came back down. On March 3rd, it was $13.50, and then it's been on just a terrific tear for pretty much the last month and a half, kind of like the big dog gold itself, gone from about $13.50 all the way up to pretty much $20. I think it hit 2031 yesterday, so that would be a new 52-week high. So an impressive run, pretty much $7 to the upside, pretty darn close here, just in the last month and a half. So pretty much this entire year, they were actually down slightly on the year until this move kicked in. So this move has really just saved them for the year. And Mr. Flowmaster, if this paper is to be believed, it seems like somebody thinks this move is not out of steam yet. Somebody came in this morning and said, the EGO, I like the ticker, EGO, July 25s, how are they? They got 35 cents at 50. They said, you know what? I like the cut of your jib. I will pay 50 cents, good sir, 6,000 times with the stock right around here in 1991. Worth noting, when you trade the miners versus gold itself, obviously you have catalysts like earnings you can throw into the mix. They could be good, they could be bad. They are a crapshoot. The first announcement looks like you probably won't get two between now and July expiration. Maybe if they sneak one in. The first announcement is May 1st. So given that it's still a few weeks out, probably not. But you do have that one announcement there. So maybe that changes your analysis a little bit. But a kind of lofty 25 strike. Let's just look back really quickly to see. Going back 5 years, this is a new, pretty much looks like an all-time high here for Ego. Oh, no, I take it back. In the mad days of 2011, it got up to about $95. But outside of that, it's definitely an all-time high for the last decade and change. Certainly. Previous to that, the best it got was back in 2000 or 2020, excuse me, when it was like $13.50 or so. So a good little run here for Ego. Mr. Flowmaster, did you notice these July 25s, and what are your thoughts, sir?
I'm not a huge fan of gold, but I do have a couple of gold miners in my portfolio, so I guess I am a fan of gold. And as you said, when gold goes up, the miners go with it. Basically they're valued on how much gold they have in the ground or some estimate similar to oil names with oil. This is an interesting one. I mean, gold really has surprised a lot of people. It's serving as the place to put your money if you're starting to panic, which it does sometimes. I kind of like it. I mean, you've also got to play on kind of just the turmoil in the U.S., right? Because if the currency gets weaker, then the price of gold in dollars gets more expensive. So I kind of like it. I mean, it's I'm trying to double check. It looks like a straight up buy. Every once in a while I get a little nervous. Ever since one time I was at a bank talking to a trader, showing him an execution, and he said, yeah, it looks like a buy, but we were actually the bank that put it up, and that customer was actually selling. And I was like, well, wait, what do you mean? And he said, occasionally they will do some things to obfuscate what's going on. So gotta be a little careful, maybe kind of keep an eye on the volatility. The stock at 20 and these are the 25 strike. It's also possible that somebody who owns the stock just decided, okay, I want to cap my gains up another 20% out to July and put some money in my pocket.
It'd be nice. We should all be so lucky as to have big banks be willing to pay the offer for us if we want to sell.
Yeah.
We want to sell our options, right? Oh yes, I too want to sell on the offer. Good sir. But if you do like it as a covered call, that is certainly a way to go about as well, listeners. If you like the stock, maybe around here, but maybe you think 25's a bridge too far, you're not going to have the privilege of selling the offer, obviously, but you can get them off at 35 cents. So it's up to you. You add in the $5 of appreciation plus 35 cents. Looks a heck of a lot better, I do think. So it might work better for you as a covered call. Another reason why we wanted to bring it up. But interesting nonetheless, listeners. I tell you what, we'll squeeze in one more because we got the flow master, and it's always kind of fun to parse some flow with him. Let's see, what else did we spot out there today? Let's go out to Dynatrace Inc. We have talked about them before. They're a tech company that provides an observability. There we go. The observability platform. They're one of these platforms that monitors and analyzes your performance on your various applications. Think of them as an IT name, pretty much as cool as observability sounds. 43.25, pretty much unched today. On the year, they had a decent year going. They were $44 a year ago, so they're actually down. But they did rally it back in February. On Valentine's Day, like a lot of names, they hit their apex for the year of $63. So they have sold off almost exactly $20 from that high on Valentine's Day. So they were off to a heck of a year, and then they've given it all back, and they're actually down slightly on the year today. Let's see, what did our Eye of Sauron spot out here? A similar type of flow, listeners. It was the May 50s, 5-0s. So with the stock around $43, somebody came in and said, how are these May 50s? And they started off with an offer, or the market, I should say, of 20 at 35. And they said, you know what? I will lift that 35-cent offer 3,000 times. They came back in about 3 minutes later and said, how are they now? Usually the words that put the fear of God into the hearts of all market makers. And they got a new market. Surprise, surprise. Market makers now 35-cent bid. They didn't like getting run over. They're 35 at 45. They say, you know what, we'll trade them for 40. So they got the balance off at 40. They got 1,500 for 40, then another 1,158 about 30 seconds later. So they did a total of about 5,600 or so out here at prices starting at 35 cents all the way up to 40 cents. Again, it was a good year. I mean, the 50 strike looked a hell of a lot better back when they were trading 63, obviously, than it does right now. But I don't know, Mr. Flowmaster, they came in, they felt out the market. They came back in and bought more, it seems like, afterwards. 50 strike, you could argue maybe that's a bit of a bridge too far, but they were north of that not that long ago. What are your thoughts on Dynatrace? Can it retrace its steps north of 50, sir?
Well, yeah, I'm glad you saw this one. I do have the same fond memories of selling the first tranche, and then turns out there's another tranche right behind, and the pain that involves. But I think this will actually capture earnings too. I show earnings around the same week that these expire, I think. So 15% of the money, but they're actually already 40, 45 now. So they're actually looking at some paper profits, especially if they could find some bank to take them out on the offer if they want to sell them. But I kind of like this one. I mean, what we've had in this shakeup since the beginning of the month is really actually since, even since March is, a lot of stocks really, getting whacked in value. And, we have the typical issue, which is, the value is value and price is where it is right now. And there's not much of a connection between the two. But in this case, you could be seeing somebody who really does like the stock and wants to get into it, for the next month or two.
Could be indeed. Listener, Mr. Flowmaster, you've corrupted our chat. They all want to sell their calls on the offer now. They want to sell those egos to the. That's only for special people, listeners, who can call up the broker and they want to put a few thousand or more. Probably, usually, got to put more than a few thousand to get the offer, and then the bank generously says, "I will pay my own offer," because why not? As we keep on rolling. Speaking of you folks, let's get out there now. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where we get wild and you folks also get unleashed, see what's on your brain. Let's pay off a couple of queries we asked you folks last week. In the height of all the madness last week, we asked you, hey, are you folks still down for a little 0 day, or is this just too spicy? And nearly 80% of you, 78% pretty much, said, no way, Jose, not touching 0 day or the 10-foot pole. 22%, though, the hardcore, said you're still in there. So more power to you. You are making or losing fortunes. It's kind of hard to be indifferent slinging 0 day in a week like last week. I also said, remember that par level in NVIDIA? We will come back to that. That was our question of the week last week. We said you have to hold it till the end of the year. But as we posted it at the beginning of the week last week, the December 100 puts were trading for right around $18. We said, hey, gun to your head, you got to hold it through the end of the year. Are you a buyer or a seller for $18? And nearly 60% of you, 59.2%, said you wanted to sell those bad boys. 25% want to buy them. So you think NVIDIA's fallen out of bed. And about 15.8% said you're staying clear of NVIDIA out there. Let's see really quickly, and going out to this week, we have a couple of questions. First, I mentioned earlier those June 16 puts. We did have a flash poll of that earlier this week. I think it was on the Monday Option Block show. We saw a big block of 20,000 of them trading for 12 cents. We said, an interesting level. You're buying some time. You could argue whether 16 is a bit of a bridge too far, but we put it out to you folks. You like them for 12 cents? Would you rather sell them? And 60% of you said you want to buy them for 12 cents. I get it. It's kind of a cheap flyer. So if you want a little bit of a downside lottery ticket, I mean, June, summertime is kind of the time you want to have those trades on. So kind of interesting. But I didn't think 16, maybe that a bit of a bridge too far for me. But you folks, it's like you're slightly leaning towards a little bit of a yes. And then our actual question of the week right now, listeners, I said, remember, we'll come back to Apple as well. Uncle Mike has been lamenting the fact that Apple, not quite yet north of 200 which brings us to our question of the week. We said, hey, beginning of this week is interesting. The Apple par puts, the 200 puts this time, also trading around $18 when we posted this on Monday. So $18 is kind of the magical level for the par strike and all your big Mag 7 names, apparently. So we asked you same question. You got to hold it till the end of the year. Gun to your head. Are you a buyer or a seller of the Dees par puts in Apple? Uncle Mike, we go out to you first, sir. You've been watching Apple for a while. What are your thoughts on the Dees 200 puts for $18? Would you rather sell them or buy them if you had to hold them all the way till the end of the year? Then which way do you think our audience is going? And then B, do you have any thoughts on any of these other polls we have, like our listeners want to sell the Dees par puts in NVIDIA and apparently buy the June 16 puts for 12 cents, sir?
Well, let's talk about Apple to start with. I would definitely be a seller if I had a gun to my head, but I would prefer to be just a buyer of the stock because it would not surprise me if Apple shot back up to 250 by the end of the year. One thing that I think we need to not lose sight of is that there's still a whole lot of football to be played. Whenever you go down a football game 14-0, one thing that I always would tell my guys is 14 points is not going to win this football game. And with that being said, there's a whole lot of game left. And I think this year we still have almost three. We're just starting the second quarter, literally. And I think there's a long ways to go. So if I had a gun to my head, if I had to be a buyer or a seller, 100% I'd rather be a seller. But I would like to write in my choice of just owning the stock instead. With NVIDIA, I actually kind of like that, the 100 par puts with NVIDIA, based upon the fact that if I'm owning NVIDIA for 82, or because I think they're $18, I think you said, I would not mind owning it at that price. And I think that's a pretty good risk reward. I don't know if I would bother buying the 16-cent puts, though. So those are my thoughts.
Mr. Flowmaster, same question for you, sir. I'll also add on the addendum. What do you think about 80% of our audience saying, no way, Jose, to zero-day options, at least right now, a little bit too spicy? And then B, your thoughts on selling the Dees par puts in NVIDIA and in Apple. And also, I forgot to mention our actual other question of the week, the tariff tantrum. Will it continue through the end of the month? VIX was 35 when we posted this at the beginning of the week. Quite simply, VIX higher or lower at the end of the month. Which way you going, Mr. Flowmaster?
Well, I mean, VIX is 30. It's going to take a lot of motion to hold it there for another couple of weeks. That said, we're getting some shocks. So I think VIX will be a little lower. I see us kind of getting back into the mid-20 zone. And I think that our listeners probably would lean that way too. And in terms of selling or buying strikes that are nice big round numbers, I'd be a seller of both. I mean, the story at Apple, it obviously has kind of everything to do with their production in China. Just seeing that they seem to be, that Washington seems to be kind of making some carve outs for cell phones specifically. I think they'll survive and probably thrive. And so I would be a seller of both. I think our listeners would be a seller of both the hundreds in NVIDIA and the 200s in Apple.
Let's see, our audience, so they did want to sell the NVIDIA. Right now, they're kind of mixed on the Apple, slightly biased towards selling. 54.5% want to sell them. 45.5% want to buy them. We got 1 day left. Listeners, get out there and make your voice heard. Also on our VIX question, we said is going to be around 35 at the end of the month, higher or lower. 57.5% going lower, which go figure it's lower right now, so it makes sense. 30% saying higher. 12.5% say we're going to be vacillating around the 35 strike. Before we get out of here, we had an interesting question of the week. I wanted to get your thoughts on it, Mr. Flowmaster. I touched on it yesterday on Options Bootcamp, so I gave my thoughts there. It came from our longtime listener, Mr. BZ Tokyo. He wrote in saying, was something funny going on within a few minutes before the tariff announcement last week? He was specifically asking about Apache Corp, which is, a lot of people have written into us asking about some skullduggery last week. No one's asked about Apache, so that's the first time we talked about Apache. He said he's been getting kind of run over on the stock a little bit. It sold off from the 20s down to around 14.5. And he said right before the tariff announcement came out, he saw a big print of, these were expiring last week, obviously, on last Friday, the 11th, the 15 half calls, which was about $1 out of the money, only 2 days to go. A big print of them went out, over 3,000 of them, trading for 18 cents a pop. He thought that was kind of crazy. Then he thought maybe somebody knows something. So he bought some, and they ended up going out worth over $1. So he was happy on that trade and made back some of the losses he's made on Apache. But he thought that was kind of strange going up right before the tariff announcement. And he wanted to know if we had seen any other weird prints. So I said yesterday on the boot camp, a lot of people have written in with questions about SPY prints, or I'm assuming SPEQX 0-day prints. Those are kind of harder to filter through, obviously, because there's well over 4, almost 5 million the day this all went up, obviously. So kind of finding the needle in the haystack's a little bit more challenging there. But Mr. Flowmaster, I'm sure you've had similar inquiries, maybe not Apache, but what are your thoughts on any, shall we say, interesting or well-timed prints that you noticed last week, sir?
Well, I did actually kind of take advantage of the data I have access to and there were plenty of examples of, calls that went from 50 cents to $200. That's kind of what you get on a move that's, several hundred points. What was actually pretty interesting in SPX, the positions going into that move, I didn't see anything bigger than a couple thousand contracts in the 0-day space. And that's arrived at just by basically taking the customer buying minus the customer selling. And there were some downside put spreads that had been sold. So, if you're looking for something kind of distinctive, I mean, those were profitable, but they're not nearly as profitable as owning some upside convexity in a move like that. So I really didn't see anything in there. Apache, I didn't actually dig into. But on that Wednesday, there were almost 10.7 million executions to dig through, and I kind of think that it's easy to find something to go, oh my God, the returns for this trade are insane, 16,000% returns all over the place. I really didn't find anything that looked. There's some headlines and some allegations out there, but I didn't find any super duper smoking gun that I would have been like, oh my goodness, somebody really needs to dig into this.
Yeah, there's a lot of flow out there, and people certainly are digging. We've been hit up a lot saying, have we seen anything? And yeah, it is like trying to find the individual raindrops in the hurricane. But there's some interesting stuff out there. I've been on the other side of, shall we say, some information leakage out of Washington in the past. So it wouldn't surprise me if some of this leaked early. But yeah, Apache, you get bonus points, Mr. BZ. That would not be my first choice for playing the Trump tariff trade, Apache. So you definitely get the gold star for spotting some interesting stuff. You listeners out there, if you spotted any other interesting, or shall you say, make you say, type prints you want us to take a look at, hit us up. Let us know as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, time to go around the block. Just another public service announcement. Markets are closed tomorrow. We are off tomorrow, so don't come on looking for vol views, and don't fire up your screens tomorrow thinking you get another day of whipsaw action, unless you're hanging out maybe in crypto, in which case there's no rest for the weary. But Mr. Uncle Mike, while you're enjoying your day off tomorrow, what will you be mulling over? And by the way, Uncle Mike, no show on Monday. I will be traveling back as well. So what are you keeping an eye on until the show next Thursday, sir?
Oh, for sure. Just continuing to see how this weekend can treat us. Whenever we have a long weekend, when we are in the middle of market chaos, as we are, you never know. I'll definitely be tuning into my futures quotes on Sunday night after Easter dinner, that's for sure. And seeing where we're at with everything and seeing what headlines are going to be coming out, especially after the market today, because a lot of times they like saying crazy stuff when the market's not open.
I know you'll be eating your Easter dinner with one hand and watching WrestleMania with the other, sir. Weird that it's on Easter Sunday, but two events you don't normally think go together, WrestleMania and Easter Sunday. But c'est la vie, that is how the cards fall this year. Mr. Flowmaster, same question for you, sir. What are you keeping an eye on until your next appearance next week?
Well, I do think the macro picture is what everybody needs to keep their eye on. I also have been waking up in the middle of the night to look at the futures, which I'm not proud of, but things are just so extreme right now that we're seeing double percentage moves that are surprising compared to how things have been for the last few years. So macro factors, and then continuing to watch. We still have some earnings coming up next week. We got Tesla's next week, and Boeing and Telephone. So we have Netflix after the bell today. So still plenty of earnings to keep us busy too. So, but I just think this market, you got to be careful. You got to kind of keep your position sizes as intelligent as you can. There's going to be a lot of motion. That's what we get. That's what volatility does. It clusters, and the reasoning for all this, because it really is policy decisions, not so much kind of fundamentals, means it's going to continue to stay pretty rocky out there.
Pretty rocky times indeed. Speaking of time, that's all the time we got on the option block this week. But if you're hanging out in the Pro, just hang out. Special gift from the Southern Studio. You get TWIFO in your ear holes immediately after this show. So look forward to that. No waiting, no rest for the wicked, which would be me, as we dive right on into a little bit of futures options action. But before we do that, Mr. Uncle Mike, sir, if folks want more Uncle Mike goodness in their lives, where should they go? What should they do?
Head over to stcharleswealth.com, book an appointment with me. Would love to have a conversation with anybody in our audience. Always enjoy it.
stcharleswealth.com, the place to go to kick the tires and light the fires. And Mr. Flowmaster, if folks want to check out, you already beat them to it. You front ran all of our listeners, so they can't be the first options trade now. So thanks a lot for that, by the way. They were all excited, and now you kind of burst their bubble. So they could be like, the 15th or 20th. That's not quite as exciting. But if they want to be, let's say, some of the early adopters of the equal weighted index options, where should they go? What should they do? And what else should they be checking out over there in the land of the SIBO?
Well, head on over to SIBO.com/RMA. That's our risk and market analytics. That's where we've got our data and our platforms. I'll tell you, if anybody wants to, they could still be the 100% of the volume today in SPEQX. It is up 1.25% compared to 0.7% for the S&P. So, even maybe as maybe trying to craft an outperformance trade, and do it in a capped risk manner, meaning long calls in one and long puts in the other. Might be something interesting. So, I think it's worth watching. I think the market quality will improve because it's not a weird index. It really is a very easy to hedge index. But anyway, and then for everything else, we have SIBO.com, and we're always putting great stuff up on the regular webpage. So come on over.
I think a few of them mentioned they can be the sole volume today. So that speaks to a few of them. So you might see some trades going up after the show today. Check it out for yourselves, listeners. The place to begin all your journeys over there at the SIBO. SIBO.com/RMA. That's the end of our journey here on the option block. I'll be back in a few seconds for our pro folks talking all things TWIFO. If you're listening on demand, that'll be hitting your device later on today. Remember, we're off tomorrow for Good Friday. I'll be traveling on Monday, so no option block, no crypto on Monday. Back for our pro friends on Tuesday with another great pro Q&A. You want to check that out, you know where to go, theoptionsinsider.com/pro. And then all of our usual content next week until we're back again next Thursday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPEQX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.